stock market analysis, UNL CC 440 numerical analysis. Our team is me, Josh.
Me, Connor Elliott.
And me, Daniel. Our goal for our presentation is that we wanted to see if we could use any of the different methods that we had learned throughout our course to analyze the stock market. We wanted to know if one of these methods could be used to interpret the state of the stock so that we would know whether it was a good idea to purchase it or whether it would be a better idea to take some other action based on the current price and what we believe to be the future price of the stock. This information will be very valuable as a way to make a lot of money with very little risk.
We found our data on the NASDAQ, an American stock exchange at Liberty One Plaza in New York City. The amount of data we used was 50 data points from August 26th, 2020 to November 4th, 2020.
As for the methods we decided to use, we chose 6, 4 from the functions of interpolation methods, and 2 from the numerical integration methods. The function interpolation methods we chose was the piecewise linear interpolation, piecewise linear approximation, piecewise quadratic interpolation, and the quadratic spline interpolation. The methods we chose from the numerical integration methods was the upper and lower bound sums of rectangle methods and the trapezoidal method.
So the first method that we employed was the piecewise linear interpolation method. The linear interpolation is a useful tool because it allows us to take a look at the short-term data trends and confirm suspicions about different outlier data points. However, the linear interpolation tends to only make a whole lot of sense for the short intervals for which the individual piecewise line is created. It follows along with the actual data fairly well, but we fear that trying to use it to predict future values would be difficult.
Similar to the piecewise linear interpolation, the approximation will find the slope of the piecewise linear approximation and then find the upper and lower slope bounds based off the error threshold. It will then take the average of the two slopes and place the next point at the slope's average. As you can see, when increasing the error threshold, the graph will start to have more outliers in the data.
Then we have the piecewise quadratic interpolation. This interpolation shows the general trend of the data, but is wildly different at some points along the way. There are several local minima and maxima that simply do not exist within the data that we have retrieved. This method would not be particularly useful due to the structure and range of the data we have for this project.
With the given data, we were able to generate a series of cubic spline equations that when graphed in their intervals would yield this graph. As you can see, it is smoother than the quadratic equation, and just like the previous method, it extends past the minimum and maximum slightly. However, just like the piecewise linear interpolation, it closely follows the data. Thus, this method would mirror more accurately the buy and flow of the stock market on a day-to-day level.
Moving on to our numerical integration methods, we decided to integrate each week to find the total sum of each week, so that we could compare each week to the next to get an idea of how well that stock did against the previous. This also lends itself to be a good reduced version of the linear interpolation. I would also note that the time intervals could be scaled up or down, like say up to a month or down to 3 days if you wanted. For the data, I found the upper and lower bound sums for each week. You can see that the values of the lower consistently fall below the upper bounds. This method would allow us to see that week 2 did exceptionally well off over week 1, but had a big fall moving into week 3. In general, this would make it easier to view stocks, especially if the stock fluctuates a lot in one given week.
As with the upper and lower bound method, the implementation of the trapezoid method also extends partial weeks to be a full week by assuming that the portion of the week missing would be averaged of the actual days that were in that week. As you can see with the trapezoid method, it would fall right in between the upper and lower bound approximations. Because of this, we feel that the trapezoid method is a better approximation of the area under the curve for each week. As you can see from the graph, at week 11, there is much less value for that week. We believe this is mainly because of our week extending method is based on 5-day weeks, but in this week we only had 3. With this extension method, it would work well for approximating. However, with less days, this creates more potential error in the days to follow that had not been accounted for in that week.
We'd like to thank you for your time and attentiveness in listening to our presentation.